Hi there, welcome to another exciting session of learning provided by Quicksoft. You can contact us for any training needs or doubts you have by sending your email at contact@quicksoft.com. In last session, I had covered the topic of intercompany. Hope that gave you a good understanding of how intercompany works. If you have not seen that video, then I would suggest you to go and see that video first before you see this video. But if you have a very good understanding of what intercompany is, then you can continue to see this video. In today's session, we are going to cover another very interesting topic, and that is intercompany transactions. It is also referred as Advanced Global Intercompany System or AGIS. By using intercompany transactions, almost all the problems or issues of intercompany reconciliation and intercompany which we have discussed in the last video can be resolved. Okay, let's start. Before I show you how intercompany transaction is done, let us first understand a bit more in detail why intercompany transaction is needed. I'll share with you a scenario and two different approaches to handle the same scenario. In first business case, you buy some services centrally and then allocate the expenses to your subsidiaries. At one of our clients, they used to procure Oracle licenses at HQ level and then recharge the cost to the subsidiaries based on their usage of licenses of different modules. Now let's see how this approach is done in accounting. During AP invoice entry, the accountant can post following entries. He will debit complete expense account and credit liability account. Accountant can also enter some line description to highlight that this line needs to be recharged to subsidiaries. At the end of the month, accountant will generate the general ledger report and pick such entries for recharge. Accountant will have to create a debit note and send to the subsidiaries. Debit note accounting entries will be debit intercompany subsidiary account and credit expense account. By doing this entry, we will knock off the expense account and then ultimately will have debit intercompany subsidiary and credit liability outstanding. Subsidiary will book the expense in their books, and when they receive the debit note, entry in the subsidiary book will be debit expense account because they have to book the expense, and credit intercompany payables account. So now on the one hand we have intercompany receivable, and on the other hand we have intercompany payables account. Subsidiary will make the payment and finally HQ will receive the payment, and this intercompany will be nullified. So this process looks straightforward and looks okay, but what are the issues? If subsidiary disputes the debit note due to whatever reason, then HQ will have to change their own debit note and resubmit a debit note again to subsidiaries. And very important issue that if subsidiary does not book the expense in the same month, then there will be intercompany reconciliation issue because HQ has already booked intercompany receivable. Now if subsidiary does not book intercompany payables in the same month, then there could be an issue. Yeah, there could be a variety of issues why subsidiaries delay, because they may have some approval issues internally or some other variety of issues. This whole thing causes an issue of intercompany reconciliation. Now let me share with you approach 2. Exactly same scenario, but we are just trying to see a variation of how they do the accounting entry. If you focus on the red line here, which is in the previous approach we debited expense account. Yeah, remember, if you are booking expense account and if you have budget tracking and all that, and if you plan to book the whole expense at HQ level first, you must have enough budget to book that expense. Yeah, otherwise your expense entry in the HQ level will fail. And when you finally allocate, recharge the expense to the subsidiaries, you should also allocate budget so that they can ultimately book it into their books. In this approach, we are saying debit intercompany account. Why? Because if you debit intercompany account right here, yeah, then all the issue which we discussed previously will occur. But let me just walk you through so you understand it better. We debit intercompany account and credit liability account. So in this case, the accountant doesn't have to remember manually looking at the GL line by line and see for which line they have to recharge, which line they don't have to recharge. They can just search by intercompany account range. Yeah, that's one advantage they have. Then when accountant will pick the entries for recharge, they will have to do the debit note as before, but your debit note accounting entry will be very different. Previously you are trying to put an expense account credit, but here what we're doing is we're saying debit intercompany subsidiary account and credit intercompany subsidiary account. What does it mean? So we have basically two debit entry, one entry done at AP invoice level and one entry at debit note level. So the entry at the debit note level are basically they are knocking off each other. Yeah, so they don't create any additional impact on accounts, but ultimately the original debit intercompany account stays. So subsidiary, once they receive debit note, they will book the expenses in their book and they will say debit expense and credit intercompany payable. So end result very similar to previous approach. We have intercompany payables receivable out at HQ and intercompany payables at subsidiary. The issues at this level are very similar what we saw in the approach 1, very similar issues, but the only advantage is you do not have to manually track the journal ledger report, but more or less this approach you can see is very much similar. Yeah. So by doing all these two things, we are only creating in the end the intercompany reconciliation issue is still not resolved. We can still have this issue. So we need some way by which we can ensure that our monthly intercompany reconciliation issues are minimized and we don't have any problems at the closing of a month every month. All of the issue which we discussed in the previous scenario and approach, intercompany transaction tries its best to resolve all those issues, because intercompany transaction provides a structured way by which we can actually do intercompany transactions with different subsidiaries. In order to use intercompany transaction, we need to do certain setups. But the initial setup, which is very important, is intercompany system options. This is a global setup for your intercompany transactions. So this applies to all kind of intercompany transactions which you do. Then we need to define intercompany organization. Intercompany is done between two different entities, receiving organization and providing organization. So we have to define all these organizations in the system. Once we define all these organizations, then we need to give access to the users. Which user can transact using which organization. This provides more control. And then we also define, when you define system option, we also define intercompany calendar. The advantage of defining a separate intercompany calendar is that you can choose after which date you cannot do any more intercompany transactions. Many companies have seen the setup, let's say for example month end is the end of the month, but they can say maybe 22nd of every month intercompany period will be closed so that nobody can do any more intercompany transactions. So this ensures that once the intercompany is reconciled on 22nd, by end of the month when they do actual month end closing, they won't face any new issues. So we can also define approval flows. Approval flow is very useful because, for example, if I am the sending organization and when I send some transaction to the receiving organization, I can choose whether they need to approve it or not. Because approval provides their consensus for the transaction. So once they approve, then we can ensure that they have agreed to the whatever charge we are sending to them. It's up to you to define approval. If you do not need approval, you can ignore the approval part. Some organizations need that when they try to send any intercompany transaction, then as per the local legal requirement, they need AP or AR invoice. Yeah, so if you want, then you can configure the system to generate AP and AR invoice once the transaction has been approved. Then we need to define some receivable assignment. These are required to create an AR invoice. Then finally we need balancing rules which will ultimately do intercompany balancing in the system. So in today's session I'll show you how to create intercompany transaction entry and journal creation when we are trying to interact between two different legal entities, and we'll also try to do same thing but trying to do interaction with two different ledgers. In the first example, there are two different legal entities but part of the same ledger. In the second example, legal entities are different but the ledgers are also different, and we'll finally see how to create AR and AP invoice. And once we are done with transaction, we'll show you how to do the intercompany reconciliation process. Let me show you our first setup, which is intercompany system. I go to my project, implementation project. I search for intercompany. You can pick anything from here because I just want, my goal is to just to go to intercompany menu, which is all that intercompany setup are listed here. It's under define and maintain intercompany processing rules. I go to manage intercompany system options. To edit intercompany batch numbering, do you want it to be manual or system generated? In this example we will choose system generated. Intercompany currency, I'll choose Singapore dollars. You can choose intercompany currency whether it will be same or different, but I think it's advisable to use one single intercompany currency so that it's consistent across Minimum transaction amount. What should be the minimum transaction for intercompany? Because sometimes people create so many small amount transaction which only create more hassle than benefit. So you can say anything below minimum amount should be $50. We don't want $10 debit note, $20 debit notes to be floating across the organization. What should be the currency for minimum entered currency? Choosing same as in dollar. And if the currency differences are there, which conversion rate to use? We are saying corporate. Allow receiver to reject transactions. Do you want your receiver who receives the intercompany request to be able to reject? I think the whole purpose of intercompany transaction is consensus, so we should always allow this to be yes. Intercompany calendar. In this example, I am using the same calendar which I am using from a book, but ideally this should be a different calendar so that we can close it independently and restrict intercompany transaction all the way to closing of the month. So we always advise you to use a separate calendar. Default transaction type. When you do intercompany transactions, you have to choose transaction type. You can define your own transaction types as needed, but in this case, I'm just saying when I do defaulting, always show IC intercompany additions. Summarize distribution for receivable invoicing. When a transaction intercompany transaction creates a AR invoice, should it summarize distribution or not? I'm choosing no. You can choose as per your requirement. Once you're done, click on save and close. So now we're done with intercompany system options. Next step is to do intercompany transaction types. I added this line just now because I had missed to add transaction types previously. So now I will show you how to create intercompany transaction types. To create intercompany transaction types, go to the option manage intercompany transaction types. As you can see, these are default transaction types given by the system, but you can always create more if needed. What is the benefit of transaction type? By transaction type, we control whether you need invoicing for this transaction type, yes or no. Do you require approval for this transaction type? And whether if after some time you want to disable the transaction type, you can also do that. So this gives you control whether you want invoicing or whether you want manual approval or not. If you see, IC addition requires approval. All other items do not require approvals. When we create any journal, you will see the difference of transaction behavior depending on the setup done here. So once you have done any addition, maybe we'll just add one more transaction type. I'll say IC as a testing, and I want approval for this one also. Maybe no approval for this one. Say save and close. I have to give it code also, so I give number 6 and then I click save and close. So we are done with intercompany transaction type. The next step is to define intercompany organizations. Before I go to intercompany organization, let me show you intercompany period status. Let me go to period close. In a period close screen, I can see the GL period open is August 18. I'm sharing same calendar, but currently my period is not open for all these transaction types. So period is defined for each and every transaction type. So you can choose to have some transaction type close and some transaction type open depending upon your business need. Let me go to this intercompany additions. Go to action and say, I can just go to addition and say click on open. Notice the period status has changed to open, and we added also one more intercompany adjustment. Let's say open. Yeah, these periods have been open. Now we go back to our next step, which is intercompany organizations. Let us search for whether we have any organization created already. My legal entity is USSG HQ legal entity. Let me search. Okay, there's nothing, so I click on plus to create. My organization name will be, I could say QSHQ HQ organization. Legal entity name. Disable business unit. Disable business unit and able business unit is used to create AP and AR invoices. If you have any default organization contact, you can provide. I just choose any at this stage. And description you want to give. Once you're done, you can click on save. Okay, so I want to create one more. This time I want to create for my SG organization. Basically, I have two organizations, two legal entities in Singapore, one HQ and one normal Singapore entity. I will connect it to my respective legal entity, which is this one. My receivable business unit will be SGBU2 and payable business unit will be SGBU2. Contact, I can put same guy. Description, I can say US Aviation. Okay, let me do one more. Let's say QS MY organization. So that when we do later across ledger, so we'll have the organization available. Say QS MY legal entity, Sable QMY QSBU1 MY QS BU1. I can put some contact. Zero contact will be notified when there is a intercompany transaction. Okay, now we're done. I click on save and close. So we have finished defining intercompany organizations. After defining intercompany organization, we need to grant access to the users so that who can do transactions. Without this access, users will not be able to do any transaction. So let us do access granting to the respective users. To grant access, I go to manage intercompany organization data access for users. I search for the username. No context has been set, so I just answer create. I choose username, role general accountant, security context, intercompany organization, the organization which I defined, HQ, add one more, general accountant, intercompany organization, QSHG organization. I add one more. Generally, we do not give all the organization access to the same person, but I'm just showing you a simple example. You can choose based on the control and checks and balances you need. You can choose to give them access accordingly. This is a simple demo, so I'm just putting it to same guy, USMY. Save and close. Once you are done, click on done. So we have finished granting access to the user for specific organization. Now we have to see whether all the transaction type which we have defined, if we need any approval for those transaction type, have we defined approvals or not. So let's go and define an approval for transaction type which requires. To define approvers, we need to go to Business Process Manager or BPM. We can go to BPM from our setup and maintenance, or we can also go from this alerts. Click on alert and click on more details. It will show you the expanded list of notifications. Now on top here, choose administration. Once you are at this list, if you have access to the admin, you can go to task configuration. Here all the different kinds of approvers are listed. We will look for fund transaction. Okay. Fund. Okay. Remember, this journal approval is different from journal approval of the normal journals. So this is a different transaction type in BPM which you should be modifying. So I'm choosing FinFund transaction approval. I click here. Then I choose edit. Then we go to assignee. In this example, we go to participant and then we define as complex rule as required by you. In my very simple scenario, I've chosen assignee based on name and expression, and I've given a username as my name as approver. So in this case, what happens is it will go to me for approval and I will approve it. But as I mentioned earlier, you can define this as complex as required. So once you have defined this, click on save, give some comment if you want to, click OK and say commit task. Okay. So this will complete your definition of approvers for your intercompany transaction. So we have defined intercompany system options. We have done intercompany transaction type. We have defined intercompany organization. We have given access to the user for intercompany organizations, and we have just now defined approval rules. Basically, at this stage, we are ready to do a transaction. So let's just create one transaction, which is intercompany transaction entry and journal creation within two different legal entities, but they are within the same ledger. To create an intercompany transaction, we'll go to intercompany accounting transactions. Open the menu option and say create transaction. I choose the provider organization, which is my HQ organization. I've taken transaction type name as intercompany addition. You remember, intercompany addition requires approval. I just put some description from HQ to subsidiary. Exchange rate is corporate. Control amount, we choose set a control amount about the journal entry. You say 500. So this will make sure my transaction is 500, not less, not more. Then I go to my transactions. The top portion is my header. I go to transactions. I choose the receiving organization. I had given my provider organization. Now I'm giving my receiver organization. Let me choose my Singapore entity, Singapore organization. And what I'm going to do, I'm going to debit this company with 500. And I can give some remark. If I want, I can also add some attachments. I go to my provider organization to give my distribution account. In this example, I will just give a dummy account, so please don't focus on what account I choose. I'm just trying to show you the process. This is my company. So I have chosen this account combination as a provider organization. So I'm saying this account will be credited by 500. I will give some remark. Then I go to receiver. If I want, I can suggest a combination for receiver, and receiver can still edit it. So what I will do is I will take this and I go to receiver and give this combination. My receiver entity is different. It's a different entity. I just show you. So from HQ to subsidiary, So this is not the HK, this is subsidiary. So I'm debiting 500. Receiver organization. So what I've done is I have created a transaction. I've given provider organization, receiver organization. I've given provider and receiver accounts. Yeah. And then I can, once I'm ready, I can click on save and submit. In my another video, I'll share more about automatically generating distribution and assigning distribution. But in this video, we will just focus on manually entering it. So I save it. Remember the batch number 2197. Then I submit it. Let me quickly show you what kind of statuses an intercompany transaction goes through. When you start, it goes through as new. Once you send, submit becomes submitted. Received, you can reject it or you can approve it. Then finally you transfer it to general ledger or receivable or payable, and the last final status is complete. I will show you a link of this user guide from Oracle, so you can always refer to this to understand a bit more. Just wanted to give you an idea what kind of status it goes through. This gives a very good idea about at this status what can you do, what you cannot do, what will be next status. It's a very nice table, so you should have a good look at it and understand it well. As we know, this particular transaction type requires approval, and I have defined myself as an approver, so I can go and look for any alert which has been received. System has sent me an alert saying the inbound batch of this particular ID requires your approval. But if I am the receiving organization, I can go to this task list and go to manage intercompany inbound. Once I receive this alert, I can inquire and search for the batch. It will show me the batch. It's received. Okay. Then I can open this batch. I can look at the details what is there. If I don't like it, I can always give a reason and reject it. But if it's everything okay, this is the provider account code. I don't care what they have given, but I'm more focused on my account code. They've given suggested some account, but I don't like this. I can go and change it. Again, as I said, don't focus on account code which I choose. It's just a dummy account to show you transaction. And I'm okay with this one. Everything okay. I can say save and close. So basically, now I can say I'm happy with the transaction, and I click on approve. Done. As a provider organization, they will receive a notification of what has happened for something like this. The inbound batch has been approved. They can go to manage intercompany outbound, search for the batch number. They see the status is submitted. They can see the connection. Now this system has automatically already done the intercompany balancing for provider and receiver. I had given only one line, but now you notice this first line I had given, second line system has created the intercompany receivables to the subsidiary company. In the receiver, it has created intercompany payable for the to the providing company. Once you're done this one, you can go back. Your batch status is, now you can go back to your task list. If any error, it will be shown here. If no error, then everything is fine. I go to batch status. So far what we have done into a separate area which is called intercompany transaction. Whatever journal entries it shows you, these are not currently transferred to GL or general ledger tables. So what we need to do is we need to do transfer to general ledger process. Here you can give all these parameters. I can give my ledger, from ledger to ledger is same. You can choose all these parameters from organization to organization, whatever you need, and then you can say submit. Now after this submit completes, I can track my status here. After the submit complete, I will see the journal in my normal journal entries. My process is completed, that means the process is no issues. So I can click on view output to see the result. Okay. So now let us go back to our journal entry screen to see this journal. So I go to my home page again. I go to journal and accounting, journals. I say I want to manage journals and look for journals created in my period, and I search. This was my journal 2197, remember? I open it to see. This is my journal from HQ subsidiary, remember the description I have given, and I look at the entries. This is the 4 entries created. Because they are both HQ and subsidiary are part of the same ledger, so it will be part of one particular journal, but the effect will be balanced for each balancing company. So this completes a process of intercompany transaction as where we want to create an intercompany journal. You can post this journal. Once this process completes, your journal will be posted. So in this example, I have shown you how to create intercompany transaction entry and journal creation within 2 different legal entities, but they were part of the same ledger. Now I want to show you another process where I will create an intercompany transaction entry and journal creation within 2 different ledgers. Remember, when we created organization, we also defined an organization for Malaysia. So now I will do a transaction with Malaysia. To do an intercompany transaction across ledgers, we'll follow same steps. I go to intercompany accounting, transactions. I go to my task list, create transaction, provider, let's say again HQ, US, Singapore HQ. It's again intercompany additions. Basic transaction, I'll say from SG HQ to MY. And amount is 1000. I go to my transactions. What's my receiving organization? It's Malaysia. I choose Malaysia organization, and I say I want to debit them 1000. Recharge. Any comment you can give, transaction description is so for your reference. I go to my provider account. Plus, my account is gone, so I have to choose again. So I've chosen this account combination. I say OK, and I want to credit my aside, provider, organization, account. I go to receiver. I can leave same account, you can do same account as a debit, but here I choose a different company, Malaysia. In this example, we have a global company which shares common chart of accounts. Yeah. So now you notice the organization. If you notice the steps between the previous example and this example exactly the same, the only difference is I have chosen an organization which is in different ledger and the balancing entity is different. Yeah, just everything is same. So click on save. Remember the batch number. I click on submit. System will send a notification to the receiving organization that there is a batch requiring your approval. Now as a receiving organization, they will go to task and say manage intercompany inbound. They will search for this task number. Consider task from SG to MY. They can open this batch. And then they can look at provider account, receiver account. If they want to change account, they can, as I've showed you in the previous example. It's up to them. And then if they're happy with this one, they can say save and close, and they can actually now approve this transaction. Transaction has been approved. Click on done. Now the receiving organization or the providing will receive an alert that transaction has been approved. They can go to intercompany and search for their batch. Batch is submitted, so they know it's been. They also have a notification to tell them this has been approved. They can go there. For their reference, they can see what account has been given. You also notice the intercompany balancing has been done. Yeah. Now you can go. Now we have the next process, which is to convert it to a journal voucher. To transfer the journals, you go to transfer to journal ledger. Ledger. Let's done it for Singapore book first. Then click on submit. Let's review the status. Still running. The process is completed. We can now review the journal. I go to my home page. Journal accounting, journals, inquire, manage journals. Windows 18, unposted journal. I can see the journal which one I did just now, 2198. Yeah, 2198. This was between us and Malaysia with QSMI Consulting. I can see the journal here. Yeah, and now I can do the posting. Let's change the book now and inquire whether the journal is there in the Malaysia book. Okay. Now we can give investigating study. Look unposted in search. There's no data because we have not run the process for Malaysia book. So we go back to our intercompany journals. We go back to home page. I go to intercompany transactions. And then I go to task list. Transfer to general ledger. US. Which is Malaysia now. And I submit the process. Let's wait for the process to complete. The process is completed successfully. Let's see the view output. Okay. There's some error. The conversion rate does not exist or is invalid. Now remember, the exchange rate in Malaysia book is Malaysian ringgit, and I am transacting in Singapore dollar currency. So when the journal goes to Malaysia book in Sing dollar, there should be an exchange rate available from Sing dollar to Malaysian ringgit. Otherwise, the transaction cannot be processed. So I need to define the exchange rate first, and then run the process again. To define the exchange rates, I go to manage daily rates. Then go to daily rates. I define from currencies. I search in the system whether exchange rate available. I click on search. It's not available, so I need to define exchange rates. To define the rates, I create the spreadsheet. When a spreadsheet opens, it prompts you to enter your login ID password. My spreadsheet is open, so I just enter a rate as G by R. Conversion day rate. I can enter, let's say, as a dummy, enter 3. Oh, sorry. Type corporate from. I enter conversion rate, enter 3. Insert action, that's it. So I say now submit. I go back to my currency rate manager and search. I can see the rate has been defined. So now if I go and try to reprocess my journal, I find the rate. So I will try to process it again. Go to my home page. I go to intercompany transactions. If you can see, there is a journal requiring attention. Transfer status. I can click on it to see more details. This is a journal which has not been transacted yet. So I go and do transfer to journal ledger. Take US, Malaysia. Say submit. We wait for the process to complete. Process has completed. Let's look at the output now. Success. Okay, very good. Now we can go back to Malaysia book journal entry and see what happened. Journal accounting, journal, and we go task list, manage journals, August 18, unposted, research. We should see a journal here now. This is the journal which came. You can see the journal. You can see it has been balanced with intercompany payable to Singapore HQ. Now you can post the journal. So we have completed intercompany transaction entry and journal creation within two different ledgers. So now you see the power of intercompany transaction. So you can do within ledger and you can go across ledger, and it will make sure that when a transaction is booked, it's booked in both the companies. So at the time of period closing, if you do intercompany reconciliation, you will not have any mismatch because transaction is either in both the books or in none of the books. So this completes our intercompany transaction journal ledger creation. In this video, you have understood Oracle Fusion intercompany transactions process. I have shown you all the necessary setups which are required to do this process, and once the setup process is done and when you do transactions, how it can allow you to create transactions within the same ledger across different legal entities, or if you have transactions across ledgers. And I've shown you the process from end to end for all the general ledger. For AR and AP, if you want some organization required, you send them AR invoice or AP invoice. I'm going to cover that in a separate session. So for this session, I thank you very much for your attention, and I hope you enjoyed this session. Please remember to subscribe to our channel so that you can receive notification for all future videos which I'll be posting. At any point of time, if you have any inquiry, feel free to send us an email at our address contact@quicksoft.com, and I hope you will enjoy and continue to watching our channel. Thank you very much for your time and happy learning.